Hi everyone, welcome back. Hope everyone is having a great Tuesday. Today I thought we were going to be going down a little bit more, but we actually ended up going up in the markets along with Bitcoin and Ethereum. So we'll look at what's going on there, and we'll also take a look at the miners. We still have Hive reaching new 52-week lows today, along with Riot, Hut 8, Iris Energy, and Soluna. So we're still kind of in that downward trend for the miners, but the other miners did a little bit better today, which was great. But I wanted to buy some more CleanSpark today, along with Bitfarms, put in my orders, but they didn't go through because price started going back up. So I'm going to hold off until price drops a little bit more. Okay, and then we also have some good news and some bad news from Core Scientific. They reported their Q3 report, so we'll go over that. Iris Energy also provided some updates on their special purpose vehicle loans that they have, whatever they call those things. So we'll get into all that as well. So there's some good and there's some also bad in here as well. So as always, you guys know the drill here, not financial advice, for entertainment only. Do your own research. I'm investing in following coins and companies for full disclosure. That way you guys are aware of everything. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's take a look at the markets here. So the S&P 500 was up 1.36% to 4,003. Dow Jones was up 1.18% to 34,098. NASDAQ was up 1.48% to 11,724. So it was a good day in the markets. And Bitcoin was also up today a little bit. It bounced back from the lows yesterday that we had. It went up 2.79%. It closed at 16,199. We hit a low of 15,596 and a high of 16,294. Now, on the daily chart, it's still looking like the RSI is flat while price has been going down. That's not typically a good sign. I hope I'm wrong on this, but I think we're going to be going down a little bit more in price on Bitcoin over the next couple of weeks. If we look at the 4-hour chart here, we can see the same thing. RSI jumped back way up here, and prior to that, we were up higher in price, so we're still looking bearish on the 4-hour chart, and the 1-hour chart is looking kind of the same way. If we go just a couple hours out, we can see here, let me see if I can zoom this in a little bit. If we go just back a couple hours here, price was actually lower at that point, so we are a little bit higher on the 1-hour chart here, but if we go far enough back to over here, we're still lower from that point. So we're still waiting on a confirmation that we're getting into maybe a little bit of a bull rally on the 1-hour chart, but the RSI is still pretty high right now. So my gut feeling is we'll possibly be going down a little bit more. Okay, Ethereum was also up today as well. It was up 2.92% today, so it closed at 1,138. We hit a low of 1,073 and a high of 1,141. Okay. And Any was up 0.76% to 34 cents. Argo was up 3.76% to 8 cents. Bit Digital was up 3.11% to 90 cents. Bitfarms was up nicely today, 7.27% to 59 cents. I put in my buy order at 52 cents this morning. It didn't go through, so I'll wait on that one. CleanSpark, same thing. I put in a buy order at 205. It was up today 6.44% to $2.15. I'm going to wait on that one to get it closer to a $2 range. Cores was down way today, down 20% to 13 cents. The news came out, or they released the Q3 results. I don't think his investors liked what they saw in there, and we'll go over it. DigiHost was up 7.25% to 63 cents. DMG was up 6.86% to 14, almost 15 cents. Greenidge was down 3.95% to 55 cents. Hive was up 6% to $2.12. They did hit a low today to get the 52-week low today. Hut 8 was up 3.12% to $1.16. Iris Energy was down 1.29% to $1.53. Luxfolio was up 11.11% to half a penny. Marathon was up 3.72% to $6.42. And Mawson was down 1.38% to 35 cents. Riot was actually up a little bit here, 0.25% to $3.89. And Soluna was down 11.83% to 76 cents, almost 77. And Stronghold was down 0.58% to 73 cents. Okay, so those are all the miners. Let's take a look at the network hash rate here. And it is still at 261, something like it was yesterday. So that may not change until possibly in an hour or so. But still seems like it's going back up a little bit here. Okay, so that is all of the markets, Bitcoin, Ethereum, and the miners, along with the network hash rate. Let's see what the news stories we got. So Iris Energy Limited filed a form with the SEC, the Form 6K. Here is the important parts on it. So let's see. This provides provided an update in relation to its 3 limited recourse equipment financing facilities, the facilities with separate wholly owned special purpose vehicles of the company, and our SPV1, SPV2, and SPV3, and collectively the SPVs, and also announced certain preliminary financial information and operational updates for the 3 months ended September 30th. We won't go into those because those are still preliminary and they haven't really filed those. So once they do file them, we'll go over those at that time. Here is the nitty-gritty of it all. Further to recent announcement, the SPVs have received default and acceleration notices from the lender in respect of the facilities, including a demand that each facility be immediately repaid in full. So it looks like they weren't able to work out any kind of deals. Let's continue on here. So while no assurance can be provided as to what action may be taken, the company expects that the lender will take steps to enforce the indebtedness and its rights in the collateral securing the facilities of SPV2 and SPV3, which includes approximately 3.6 exahash of miners securing such facilities and other assets of non-recourse SPVs. So those are probably going to be, I think they reported in here that they actually turned those off. So as previously announced, the secured miners owned by the SPV2 and SPV3 produce insufficient cash flow to service their respective debt financing obligations. The facilities were intentionally secured for prudent risk management to protect the underlying business and data center infrastructure the group has built. Example, without a parent company guarantee and without recourse to any other group entities. So that's good. The group does not have any outstanding debt facilities other than the facilities listed here. So the group has 53 million of cash and cash equivalents as of October 31st. So that's good. And this is the bad part here. Following receipt of the purported acceleration notice on November 4th, certain other subsidiaries of the company terminated their respective hosting arrangements with non-recourse SPV2 and SPV3, and none of the 3.6 exahash of miners owned by such non-SPVs are operating. So it sounds, I don't know exactly when they were shut off, but it sounds like as of November 4th, possibly. Excluding such miners, the group has 2.4 exahash of miners as of November 20th, comprised of the following. So they have approximately 1.1 exahash of miners in operation right now, including approximately 0.2 exahash of miners securing the facility with non-recourse SPV1. So if SPV1 goes into default, possibly those might lose another 0.2 exahash. And approximately 1.3 exahash of miners in transit and or pending deployment. So we'll at least get back up to 2.3, maybe 2.4. If the 0.2 exahash goes away, then we're back down to 2.2, which isn't too bad. They were at 3.6. It's still a pretty big hit if those miners are being returned, basically. The group's data center capacity and development pipeline are unaffected by the recent events in respect of the relevant facilities. As a result of the termination of the hosting arrangements with SPV2 and SPV3, the group continues to explore opportunities to utilize its available data center capacity, recognizing the current scarcity of industry hosting data center capacity and the prospect of utilizing 75 million of prepayments already made to Bitmain in respect of additional 7.5 exahash of contracted miners for further self-mining. So that's not too bad. I would caution against going with hosting. Hosting, as we've seen before with a lot of the other miners, it is just not profitable, nowhere near where self-mining is. I would just go headstrong with self-mining and call it a day. Okay, so they still have quite a bit of growth left, possibly 75 million. I don't know how much of that is actually of the 7.5 exahash. Might be just a portion of it, but we don't know that right now. Update on limited recourse equipment financing. So our SPV2 and SPV3 failed to make the scheduled principal payments under the respective facilities by the extended due date of November 8th. On November 15th, SPV2 and SPV3 received a further notice from the lender under the facilities alleging that the failure to make the scheduled principal payment constitutes an event of default under each applicable facility after giving effect to applicable grace periods. Boy, I hate the legalese talk. Can be sometimes a tongue twister. So they are in default right now. Further, on November 18th, the SPVs received a notice from the lender, the demand notice, stating that the entire principal amount of the facilities of the SPV2 and SPV3 under which the lender claims there is aggregate outstanding indebtedness of approximately 107.8 million as of November 18th, including accrued interest and late fees, had been declared immediately due and payable pursuant to November 4th reported acceleration notice. So it does look like they are going to be getting called out on these, and these will be going back. So let's take a look at the numbers that I have for them, and we'll get into some more details here. So here's Iris Energy. They had practically 3.8 and almost 3.9 exahash running in October. Now that they've turned off the 3.6 exahash, and they're stating that they are at 1 exahash. I don't know when that got installed, but I have them basically taken off these miners here, which were 100 terahash miners, along with, it looks like, this is just what I calculated would be these miners here. So it's a mixed bag of 100 terahash and 90 terahash miners, along with everything equates to about 3.6 exahash here that we removed. And I do have them at 1.1 exahash right now with the miners left over. We still have other miners here that could be getting installed. We could be getting to about 2.4, which is correct, which is what they're reporting. And then they still said that they have another 7.5 exahash left, possibly in the pipeline. I think that would be these over here potentially. So if the miners got turned off at the beginning of August, somewhere around the 4th, I'm guessing they're going to be making somewhere around 2.1, maybe a little bit more than that, around 2.3, since they were running for about 4 days possibly. That's going to help them at that point. But it's a big hit from the 8.8 million that they were making in October to November. The good thing is that the company itself will not suffer from it. The only thing is they're going to have to return the miners to the credit holder, or the whoever giving the credit for those. Those are going to be going away, and they can move forward with their own miners at possibly a lot better rates. So that's the good part there. The bad part is the decrease in hash rate. It's going to generate less revenue, and we'll see how they progress going into November, December this month or this year, and then what the future is going to hold for them into 2023. Okay? So overall, it's not too bad. It is a big hit on the hash rate, like I said, but other than that, it's not too bad. The good thing is the way they set it up is it doesn't affect the company, so that's a good thing. Okay? And I think that's all we want to take a look at. They haven't provided their final Q3 numbers. When that comes out, we will cover that, but it is what it is right now. Okay? So if they get everything straightened out here and they start growing again with the potential of 7.5 exahash, they might start looking a little bit more appealing to me to possibly invest in. I was looking to invest into them, as you guys might have already heard in the prior videos, before they came out with these miners weren't being cash flow positive. You know, when the news came out that they might be in default of this, I put a halt on any of my plans of buying them until this all gets cleared out. So if this gets cleared out and they start growing again, that might make it a little bit more appealing for me to possibly buy into them. But we'll see with everything that goes on. Okay. So that was Iris. Let's take a look at Core Scientific. So Core Scientific, this is their, what is it called? Company commentary, management commentary, I think it's called. So here's some of the things that I wanted to go over with you guys. It's a little bit lengthy, but I think it's well worth it to go over it. Oh, where did it go? I just lost it. Anytime I do a screen enlarge so you guys can see it, it goes away from me. Let me see. I think we might go one more, make it a little bit easier to read and for you guys to see as well. Bear with me here. Should have been prepared. There it is. Okay. So updates on our business and liquidity position. So our operating performance and liquidity has been severely impacted by the prolonged decrease in the price of Bitcoin, the increase in electricity costs, the increase in the global Bitcoin network hash rate, and an increase in additional operating costs related to these factors. And everybody's dealing with these issues. The big thing is electricity costs. I went over this whole document trying to figure out what is the electrical cost. It sounded like the electrical cost was about 60.4 million, 60.3 million, somewhere around there. But that was a combination of their self-mining and their co-location mining, everything included in there. So it's hard to figure out what their actual, for self-mining, electricity cost is. They also dump a bunch of stuff into those numbers, which we'll get into here in a minute. But it would be really great to know what their cost is. I don't know if we'll ever know. Maybe one of these days we'll know. So as a result, management has been actively taken the steps to decrease operating costs, eliminate and delay construction expenses, reduce and delay capital expenditures, and increase hosting revenues. Okay, that's great that they're talking about it, but they actually need to act on it. And when we look at their numbers, you'll actually see that they have made some improvements, but there's still a lot of room for improvements in there. Okay, so in addition to October 2022, we determined not to make certain payments with respect to several of our debt facilities, equipment financing facilities, and leases and other financings, including our 2 bridge promissory notes. As a result, the creditor under these debt facilities may exercise remedies following any applicable grace periods, including electing to accelerate the principal amount of such debt, suing us for non-payment, and then increasing interest rates to default rates, or taking action with respect to collateral where applicable. We do not believe we were in default under any of our debt agreements as of September 30th, 2022. Okay, so there's that part of it. And then in light of the foregoing, we are in the process of exploring a number of potential strategic alternatives with respect to our capital structure, including hiring strategic advisors, raising additional capital, or restructuring its existing capital structure. Specifically, we have engaged Whale, Gottschall, and Manges, LLP as legal advisors, and PJT Partners, LP, as financial advisors to assist us in analyzing and evaluating potential strategic alternatives and initiatives to improve liquidity. Okay, there's a lot there. So they got legal counsel and along with financial advisors to help them out. And that is usually the first step before you go bankrupt. I'm not saying that they're going to go bankrupt, but that's usually one of the first steps that you get into when you're in this kind of trouble. Hopefully it doesn't get to there. I'm not saying that it will, but the potential is obviously there. So we and our advisors have begun to engage in discussions with certain of its creditors regarding these initiatives. We expect these activities will continue and intensify. Among possible alternatives, we may explore liability management transactions, including exchanging its existing debt for equity or additional debt, which transactions may be dilutive to holders of our common stock. These discussions may not result in any agreement or commercially acceptable terms at all. All right, so it's something to be mindful of. Furthermore, we may seek alternative sources of equity or debt financing, evaluate potential asset sales, which is not good, and potentially could seek relief under the applicable bankruptcy or insolvency laws, which is also not good for shareholders. So shareholders are definitely in a pickle right now. My dad included in this, as you guys probably have heard before, I said this, that he has invested quite a bit of money in them as well, and we'll see how this is all going to play out. They go into some what they currently hold. So they hold 62 Bitcoins right now, approximately 32 million in cash, compared to 1,051 Bitcoin, approximately 29 million in cash September 30th. So this was just a month later. And going down here, Celsius bankruptcy. So they strongly disagree with the allegations made in the Celsius motion and the interpretation of the Celsius agreement espoused therein, and vigorously defending our interest, including seeking resolution from the bankruptcy court and payment of any outstanding amounts owed under the Celsius agreement, subject to applicable bankruptcy law in the Celsius Chapter 11 case. Okay, the parties have agreed to stay the proceedings, including the evidentiary hearing scheduled for November 18th, which was already passed. I haven't heard anything on that one. There can be no guarantee that bankruptcy court will rule in our favor in a timely manner, or that Celsius will honor the terms of the Celsius agreement. An adverse ruling by the bankruptcy court that provides Celsius the benefit of our hosting services without Celsius fully paying the cost of such services would have a material effect on our business, financial condition, results of operations, and cash flow, which is true. If they're having to pay more for the hosting and Celsius not paying it up, they're obviously having to take it out of their own pocket, which isn't good, especially since they are in kind of a trouble themselves. So as of September 30th, 2022, 5.2 million was due from Celsius, for we had fully reserved 5.2 million as an allowance that is presented within accounting receivable net, of which 1.6 million was outstanding in July 2022 at the time of bankruptcy petition. Okay, so they are owed quite a bit of money, but it's still not enough to potentially save core from it. Down here, B. Riley equity line of credit. So in July 2022, we entered into a common stock purchase agreement, and we will have the right to sell B. Riley up to $100 million worth of shares of our common stock. And under the applicable NASDAQ rules, in no event may the company issue to B. Riley under the equity line of credit more than 70.3 million shares of common stock, which number of shares is equal to approximately 19.99% of the shares of the common stock outstanding, including prior to the execution of the equity line of credit. So that was, I think, representing $1.75, at which point this was drawn up. Now that the stock is at 20 cents roughly, to get to 100 million, you would need, what would that be? Close to 250, no, would it be 250 million shares? Times 0.2, no, it would be almost, what would that be? Let's see here. If you wanted to get to that point, 100 million divided by 0.2, 500 million shares. So then we need to offer up 500 million shares to get to the 100 million. So I don't think that's going to be happening. Plus, that would be way over that 19.99% of shares of common stock. So at most, they might get now, I don't know, was it 70.3 million shares? If we're doing the math here, why not do it? 70.3 times 0.2, they'd get 14 million right now. So not good unless they already pulled some of that money before the stock went way down. Okay, emitted bridge notes. Let's see if it didn't, that was something down here. Okay, so these are emitted bridge notes. On August 1st, we entered into two amended and restated bridge promissory notes. One in an aggregate principal amount of $60 million with B. Riley Commercial Capital LLC, and one in aggregated principal amount of $15 million with affiliate of B. Riley Commercial Capital. The amended bridge notes amend the original notes having identical principal amounts to extend the maturity date from December 7th, 2022 to June 1st, 2023. The amended bridge notes bear interest of 7%, so that's actually not too bad. So those are getting pushed out a little bit, so that's good there. And then you can see the schedule here that they were originally at. And here, Mass Mutual amendments. So in August 22, the company amended the Mass Mutual bearing loans to defer principal payments for a period of 6 months, beginning with payments due in August. So we've got August, September, October, November, December, January. So payments will start possibly again in January or February. So that gives them a little bit of time, not much, to get things in order. And then also in August 2022, the company amended the finance lease agreements with Mass Mutual Asset Finance LLC to defer lease payments for a period of 6 months, beginning with payments due in August 2022. So again, they're pushed the can down a little bit down the road here. And I think that was it here. Oh, we got something else. Hosting contract termination. Okay. So subsequent to September 30th, the hosting contracts for 3 customers, including 2 related party customers. I'm still not sure what the related party customers is, how that works. But nonetheless, were terminated. The previous hosting ASIC servers are expected to be removed from our data center facilities and returned to the customers by the end of 2022. For all 3 customers in the aggregate, we recorded the total hosting revenue for the 3 and 9 months ended September 30th of $7.3 million and $16.3 million respectively, of which $5.1 million and $11.7 million respectively was hosting revenue from related parties. We plan to replace the previous hosted ASIC servers with our own self-mining equipment as the ASIC servers are removed and returned to the customers. So that is good there. They at least got rid of some contracts that were possibly not profitable. They're going to be putting in their miners, which should be a little bit more profitable. So that's a good thing there. And I think that is it for it here. Yeah. So let's take a look at the numbers that I have for them, which is from their Q3 report. And let's see here. Core Scientific. There we go. So here's what we got. We'll go over my numbers here that I calculated on them, and then we'll get into what their numbers are. So BTC mined was 3,768, which was an increase from 3,065 in Q2. Starting hash rate was 10.3 exahash. They finished out the quarter at 13 exahash, which was still really good growth there. Average hash rate was about 11.6 exahash. They mined on average 323 BTC per exahash on that quarter. And then cost to mine 1 BTC was about 50,000 here. Minus depreciation was about 30,000, but they put in a bunch of stuff into it. It makes it difficult to figure out actually what they are paying for, just like electricity or things like that. Enterprise value, debt to equity went way up, 18.2 from 3.4. That's not good. Lower is better. You want this to be under 1 if possible. Current ratio also went way down from 0.99 in Q2 to 0.1657. You want higher is better on this one. You want to be above 1 on that one. That didn't happen. Revenue was 162 million. General administrative compensation was 43 million. But when we look into the numbers down below, I'll also point out something for you guys. But that's actually a decrease here to 26% overall of general administrative of the whole revenue. So that's gotten better. Not completely where I'd like to see it, but it's gotten better. And it's a decrease from 55%. So that is a improvement there. I still think that general and administrative should be way, way down based on the current situation that they're in. But it was for Q3, so hopefully Q4 will be a lot better than it is even here. I'd love to see this under 20 million, possibly even under 10 million. I can't believe that they're spending that much per quarter on general and administrative. Okay, current assets. So cash and cash equivalents was 29.5 million, down from 128 million. Restricted cash is 8 million from 11, so that's down also. Accounts receivable is also down to 2.1 from 2.8. Accounts receivable from related parties is 895 from 677. Deposits for equipment is down to 97 from 165. Digital assets is down from 40 to 19. Prepaid expenses and other current assets also way down to 55 from 161. So total current assets is $213 million compared to 511 in Q2 and 808 in Q1. Huge drop there. Total assets, property and equipment, so 1.15 billion. Goodwill is down to 0, so that's good. Intangible assets down to 1.4, and other current assets up a little bit here to 32 million. So total assets of 1.4 billion, down from 1.8 and down from 2.7. And that is based on Bitcoin price coming down, the value of the miners going down as well. That's contributing to it also. Current liabilities. So I think this is where they did some maneuvering here. Accounts payable is up to 43 million, up from 31. That's not good. Accrued expenses and others, 102 million, so that's down actually from 124, so that's okay. Deferred revenue up to 80 million from 71. Deferred revenue from related parties way down, 6.9 from 36. Derivative warranty liabilities is about the same, down a little bit here. Finance lease liabilities is way up, 73 million from 28. And notes payable current portion way up here to 977 million from 217. It looks like they took it from the current liabilities or the longer term liabilities over here of 852 million and the 48 million here, and they bumped it up into the current one to give them 1.289 current liabilities, and current assets are only 213 million. That is not good. That spells trouble. So total liabilities of 1.3 billion, down a little bit here from 1.4. So that's at least a little bit of an improvement from it, but not enough. Not enough. So that's what we're looking at here. Total liabilities and stockholder equity is 1.4 billion, down from 1.8. Revenue. Hosting revenue from customers was up a little bit to 35, so they did improve on that. Hosting revenue from related parties was also up to 9.1 from 7.6 roughly. Equipment sales was also up to 7.4, almost double from what it was in Q2. Equipment sales was up nicely to 29.7 roughly from 11.6. And then digital asset mining was actually down 80 million from 109. So total revenue was 162 million, down a little bit from Q2. And the biggest gainers were, was possibly the equipment sales. And the losses on the digital asset mining part of it was the reason for it. Now, profit margin sales. This is on the, what are we doing here? This is for the sales part of it that we're looking at. It's about 24.88%, so that's pretty good profit margin. Profit margin for mining was negative 45%. That is not good. And profit margin from hosting, they were still down 0.1% on it, so they're still not making enough on that one. Overall profit margin was negative 16% on it. Here's the kicker, though. Cost of revenue, which is down here, and I don't have anything listed over there. It's just placed right now. Cost of revenue, the company's cost of hosting services and cost of digital asset mining primarily consists of electrical costs, salaries, stock-based compensation, depreciation of property, plant and equipment used to perform hosting services, and mining operations and other related costs. Cost of equipment sales includes cost of mining computer equipment sold to customers. That's easy enough. But everything else, I mean, they could have just thrown the book at this and thrown everything else into it to make it look all unprofitable. I really hate sometimes the way the financial system or the accounting systems work. If your biggest cost is electricity, that should be a separate line item for investors to see what's going on there, and then what is your actual salaries. I would love to see it all more broken out, more transparent than lumping it all in there, and then you're trying to figure it all out. but yeah, I mean, they're throwing everything into that number there. And here are the numbers. So cost of hosting services was 44.9 million. Hosting came up, if we add those two together, was 44.916. So they were down just slightly on it, but still, they're saying that they're going to get to, they want to, I think they stated before, correct me if I'm wrong on this, they want to get to like 20% margins on it. Well, they're nowhere near that right now. It has improved because they were negative 12.1% in Q2, so it has improved, but they still need to get that improved even further. The cost of equipment sales, 27 million, and that's basically on the purchasing the miners and then selling them. So they only made, what did they make on that? 24% on it, roughly a couple million on it, it looks like, possibly. And then you look at cost of digital asset mining, 116 million, and they only brought in 80 million here in revenue. That's just crazy. They got to do something about that. Number one, if they're putting compensation into this right now with the market that we're in, I'm blown away. Number one, if you're in trouble, I would think that you would be cutting on everything and anything possible to bring down your costs. I know that they're a publicly traded company. They have some obligations that they need to keep to. But yeah, I mean, private companies, there's no way this would have happened. Private company would have been slashing costs as fast as they could. So there's all that information. Gross profit was negative 27 million on everything. Let's see here. Gain loss from sales of digital assets, about the same as Q2, 11 million. Impairment of digital assets was way down to 7.9 million compared to 150 million negative. So that's good. Impairment of goodwill and other intangibles, 268 million. So that's nicely down also from 790. Impairment of property, 59 million. Losses, that one's zero. Operating expenses, research and development, 6.192 million. That's actually down, so that's good, from 14.7. And I actually looked up what the research and development was. The research and development was for their software side of things, for their hosting and things like that, where I can't believe you're spending, but that also includes share-based compensation in there, everything else. But still, you're spending 6 million, so you're spending 2 million a month, basically. And if the average, just say software worker makes 150,000, how many do you have there working? What would that be, 6, roughly? No, more than that, like 12 people developing these systems. That's ridiculous. That has to get taken out under control. You only need really possibly a couple developers doing that and other people to help assist with running the machines, things like that, or maybe tens, maybe not a couple, but 20, 30, whatever you need people there. But it shouldn't be research development shouldn't cost this much, I would think. Sales and marketing was way down. I love it. Down to 39,000, looks like, from 10 million. Yeah, that Q2 number was just insane. Being down to 39,000 looks much, much better. And sales marketing, they're a Bitcoin mining company and they sell sometimes miners. How much sales and marketing do you really need? 39,000 seems about right for me. General administrative down from 90 million to 43 million, which was good. Yeah. So that was a good on that. They still need to get that down even lower, under 20,000, closer to maybe 40,000. Under 20 million, closer probably to 10 million on that. That's where I'd be doing it. Total operating expenses was 49 million. And operating loss income was 401 million, down from 1 billion. So that's good there. So there are some improvements, but they really need to tighten their belt a lot more. Overall total non-operating income expense net was 22 million. So that's actually a plus from negative 186 million. Total non-operating income was 434 million negative compared to 810. So that is good there. Net income per share, $1.23 negative compared to $2.49. So improvements there as well. So they do have some improvements. We did have some share dilution as well in the quarter. Approximately, 30 million or so shares that got added into it. And that's a little bit more than we got added in Q2, which was about what is that? Trying to do the math in my head, about 14? No, geez. That's 3, 10, 17 million. So it is a little bit of an increase. Okay, so those are all the numbers that we have for them. They are right now looking to be mining approximately in September and October, depending how many miners they got installed. I have them at 14.4 exahash in October. We'll see where they get in November, but it is 27 million with the Bitcoin price the way it is right now, and I'm using the average Bitcoin price on it. So we'll see how that's going to play out for them. We really need Bitcoin to go up for them to survive potentially. But looking at it with the fear of possible bankruptcy, they are trading right now. If we look at it, they're at 17 cents roughly, and I haven't updated this. So actually down to 12 cents. Let's see, what are they trading at right now? Probably, less than 1 PE right now. They're trading closer to half a PE on their earnings potential. Now, if for some way they can actually survive this, get out of this hole that they've dug themselves into, hopefully the creditors will be able to work with them on it. They're the biggest miner that I cover right now with the amount of exahash that they have and everything else. Bitcoin goes up, they are going to be generating a lot of revenue. But that's if they can survive this, and it's a big, big if. So be careful with this one. It's high risk, high reward. If you want to gamble a little bit, there's nothing wrong with keeping it exciting if you're especially a trader. But it is high risk, high reward, and you're more than likely to lose it all. So don't go crazy. We'll see how this is all going to play out, and that's it. So it's a tough spot. Okay, I'll just leave it at that. But they are making some improvements and need to improve further. And the other thing I wanted to mention is really quick. I know this video is getting long. Is bankruptcy should always be the last resort. It seems like with some of the not just the miners, but the companies that are in stock markets, they use the possibility of bankruptcy way too easily before putting a lot more effort into trying to save the situation as it is. Nobody wants to do cost cutting, really, especially for management. Taking back compensation, stock-based compensation, all those things that a normal, regular, everyday Joe run business would do in a heartbeat to save their business. And that's just one gripe that I have with the bankruptcy. It's there for a reason, which I understand, but it should be the last resort before everything else is possibly tried. Okay? That is it. Hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. Spreadsheet, as you know, is always available to my Patreon members. Appreciate all their support there. Love you all for watching. I'll see you guys in the next one. We'll see what we get tomorrow. Other than that, I'll see you then.